Since recording this episode, there has been a 90-day pause announced on tariffs. While this may temporarily ease tensions, the topics we discuss, such as long-term impacts on industries, consumer behavior, and globalization, remain highly relevant. All right, welcome to This Week, Next Week, Group M's podcast. And we're here today with my colleagues Jeff Foster and Nidhi Shah. We're going to have a wide-ranging conversation about current events. We're going to kick off with the tariffs, obviously, because, can you talk about anything else at the moment? And then we're going to chat through financial services, full year results from some of those largest advertisers in the financial services category towards the end of the pod, and talk about what's upcoming, because those are, can you believe it's the start of earnings already next week? I'm in denial.
Yeah, it doesn't seem like anybody's quite ready for this yet, but here we are.
Yes, and we should be getting lots of commentary about tariffs, right? So we'll have more new data points once we start hearing from CEOs and CFOs about how they're thinking about it, how it's impacting their guidance for the year. I mean, Jeff, are we going to see people pull guidance, do we think? How prevalent is that going to be?
I don't know. I mean, we're still early on into the trade wars, so I don't know. A lot can change between now and a few weeks, but I would assume if we sort of stay at this base level, I wouldn't be surprised if some guidance starts getting pulled.
Yeah. All right, well, let's talk about where we are. How are you doing? Have you slept?
Well, who knew? I didn't have on my bingo card for 2025 that watching Bloomberg, CNBC, and Fox Business would be the some of the most engaging television on of the year so far.
That's engaging. I think must watch TV.
Let's watch. Yeah,
Yeah.
exactly. More drama, on the daytime business shows than anything else right now.
I'll give you that. I will give you that. Although I think the final of the March Madness tournament was about 18 million viewers or something in the US. So that's probably up there too.
Yeah, definitely. But that already feels like ancient history at this point.
Oh man. Okay. So tariffs. I woke up and saw the news that well, we know that U.S. tariffs now stand at 104% on China. China just also announced additional retaliatory tariffs. But let's dig into a little bit about what we've been seeing and thinking about how all of these things interact, right? So tariffs on China. U.S. imports from China were around $450 billion in 2023. It's 15% of China's total that year. But U.S. exports account for just 3% of China's GDP. So they have room, right? One would think, and especially in a scenario where the rest of the world is also being targeted and looking for new partners. And it feels like that feels sort of the most intractable at the moment, I would say.
Yeah, I would agree. I think it's, that all seems to be lining up. China definitely does have some room, as does the U.S. too, but probably I would say not as much for obvious reasons.
Yeah, I mean, exports make up a smaller portion of the U.S.'s GDP than a lot of other major markets, certainly less than Germany for one. But, there's still a lot coming into the U.S. So biggest categories coming in from China, according to information we were getting from our colleagues last night there: apparel, toys, computers, phones, mechanical and electrical products. So those are some of the major exposed categories. As a market, how long ago does it feel like we were talking about those original Canadian and Mexican tariffs as well, right? Their exposure to the U.S. is obviously much higher, around 80% of exports in both cases to the U.S. So yeah, all of this playing into what advertisers are thinking about and calculating for the year ahead, right? Autos particularly impacted, metals, aluminum, steel, and the EU just announced some additional retaliation there. And so we're hearing some, I think, from major figures in the financial world, somewhat less from advertisers and manufacturers themselves, except you had a note on a couple of the auto manufacturers.
Yeah, so we are beginning to see some early signs. Jaguar Land Rover has stopped exports into the U.S. market, And also, very recently, Audi has paused importing vehicles as well. So it's interesting. Generally speaking, most auto manufacturers have about a 60 to probably closer to 90-day supply now that supply chains are sort of back up to normal. So yes, they are pausing, but it maybe not quite as dire. It gives a little bit of wiggle room to see how things play out of the next 3 months. So while the headline might look a little scary at first glance, there's still going to be supply probably for the next couple months. But
People
after
can
that,
still
we might
find
be
a car on the lot. Yeah,
yeah,
today. Yeah.
exactly. So, after that, we might be in uncharted territory, depending how things play out, but, buys those auto manufacturers a little bit of wiggle room to sort of wait and see.
Yeah. I mean, the domestic manufacturers are not wholly in the clear, right? There are still tariffs on the auto parts that flow in from other markets. I know some of those from Canada and Mexico may be covered under there are some
Right.
exemptions there still, but not 100%. So I've been in the market for a three-row electric SUV recently, keeping very close eyes on all of this tariff news. And one of the things, even though it's not a domestic manufacturer, someone like Hyundai rolling out their plant in, I believe it's Georgia,
Georgia, yeah.
means that new Hyundai Ioniq 9 is, probably exempt from at least imports on the total car, right? Maybe some of the
Right.
parts, but they're not going to be bringing in the total car. So those kinds of investments, I think, are what the goal was. It's just there's a lot of
Right.
other
Just
collateral damage along the way.
e exactly, because it takes a while to, tool up and refigure out existing auto plants, let alone build new plants. So that definitely can take years. But yeah, it's going to be very interesting already. I think Mercedes has signaled that they won't import some of their lower price entry level models because after the tariffs get added on, it just doesn't become, that accessible for what its original market segment was. And
Yeah.
on another side note, I think Ferrari had mentioned that they will be adding, passing it along the tariffs to the consumers for some of their more popular models. So
Yeah.
then again, I think if you can afford a Ferrari, that, who knows? But it'll be interesting to see if other, super high end supercars, kind of take that same approach.
Some they'll be insulated. I mean, I do think, and we talked about this a couple weeks ago on the podcast, when you start hitting asset prices like the stock market, and when we again go back to considering that the top 10% of households in the US are accountable for about 50% of the consumer spending, we are getting into those sorts of territories where even that top 10% are going to be looking at their
Yeah.
finances, pulling back on maybe home remodel projects or large purchases. It depends on what's going to be exempt. I think tech was looking for a big year, right, in terms of selling in new products and upgrades on the availability of AI. That looks a little bit harder if those are all super premium phones and computers that are now even more expensive. But I think there's still an element of don't get left behind in the AI race that's going to drive some continued spending across both hardware and software and services in the tech sector.
Yeah, no, I agree. I think those sectors, it's sort of like at the inflection point that if you're not spending on CapEx right now, investing in AI and new hardware capabilities, then I think it will really set you back. So we'll see after the earnings season what the commentary looks like.
I mean, to me, we've been talking about globalization. It's been a major theme of this year, next year, the past couple of years. And, it's I think it's a little bit like, communities going from hunter gatherer to agrarian, settling in villages, surplus in some areas allowed for specialization. And that really allowed for that marketplace, right? So not everyone had to be farming. Someone was making
Hmm.
buckets or tools
Right.
or whatever, right? And then trading. It is less efficient, surely, for every country, or at least the US, to be making all the things that all the other countries make versus allowing people to specialize. In the US, very strong medical equipment manufacturing, but not necessarily inexpensive plastic molds, right? There have been stories
Right.
about people saying, I've looked into whether we could manufacture here and I either can't get the inputs I need or it would be way too expensive. So it is starting to crack apart that idea of globalization and the global village, I think.
Yeah, no, I agree. I think certain manufacturing jobs, like as you mentioned, like especially like apparel, it's hard to bring those back to the U.S. just, based off of all those points you raised. First off, are these, if you start a factory, will you be able to find labor that's willing to do that at what price? And I think, it's like a trade-off with the American consumer. Do you want to spend, are you accustomed to spending $8 to $10 on a t-shirt, or are you okay with spending $40 or $50? And I think, once you look at that market and what people, what they really want, it makes some of the economics just doesn't make sense on a lot of those industries.
I mean, maybe this is my moment. Like I've been an evangelist for 3D printing for quite some time, and it just is never the cost and speed and quality. Just
Right.
it's not scalable. But maybe for some of those cheaper plastic products, instead of shipping,
Yeah.
we can just print.
No, I think yeah, I think, as we mentioned in an earlier conversation, maybe it sort of changes everyone's, perspective on sort of like disposable items, and whether it's apparel or home goods. Maybe it's sort of like a back to basics where you just don't consume as much, you just don't buy as many things, just,
Yeah,
for a number of reasons.
exactly. So that could be good for a eBay or used car
Right.
sites in
You
terms of
secondary.
advertiser categories, secondary
Yeah.
market companies. Yep, absolutely.
Yeah.
Getting
So I
something
think that
from Rent the Runway right now. So
Yeah, exactly. There's already lots of reports coming out about how this will affect the used car market. So, that will start bringing up used car prices and demand. So I think, you might see this trickle down effect, as you mentioned, especially like in apparel and some of those other industries and categories.
yeah. Yeah, no, we talked about so the categories. How about small business versus large business, and especially with the advertiser lens?
Yeah, I mean, the most people agree and analysts agree, and I fall into this camp. I think small business could definitely feel the brunt, of the tariffs more than larger corporations for many reasons, but namely, it's harder for them to absorb any changes in input costs and labor costs, or anything where that could go, or if their supply chains get disrupted, whereas larger corporations might have warehouses or be able to stockpile goods or be able to be a little bit more nimble on supply chain. So it's going to be interesting to see how that affects, because since small and medium businesses are such a large part of the economy, especially from an employment basis, we'll see how quickly that takes for the tariff effects to start really impacting those businesses. And, like I
Yeah,
said, who knows? This may all go away and this may not be an issue, but if this lingers, then it could really cause some pain for small and medium businesses here in the US.
the small medium sized businesses thing is interesting. I think hits to revenue and profit. Yes, absolutely, and then that does have impacts on consumer spending power, right? In terms of those being employers. I think there is a nuance in it because some of these small businesses, either they started and they didn't have a physical presence, and so they don't have rent still as a cost, or they
Right.
have already shifted a lot of offline sales and lead gen activities into media. And so we may still see, I think, advertising and media continue because that's just part of business that's bringing sales in through the door. So I don't expect that to go away entirely, right? And they are such a big piece when we're looking at industry totals. And our next full release of advertising growth is coming out in June. Uh, Again, you have to make a call on whether you think this is status quo for the rest of the year, in which case it absolutely makes sense to downgrade growth for US and global levels, or whether you think this is resolved within a couple months and you see a heavily impacted first half and then a much
Yeah.
more buoyant second half, because advertisers want to make sure they don't lose access to those budgets that they were initially granted at the
Yeah.
beginning of the year potentially. And so it's really trying to gauge what we're seeing today and how we think that's going to net out and how long term we think these are going to be. But that wealth of small business expenditure, especially going into those large digital platforms like Google and Meta,
Right.
I think are still helping to support some level of growth through the end of the year.
Yeah, I agree. And I think, just getting more measurable sort of, results and from that to those type of advertising platforms is going to be incredibly important for the small and medium business advertisers, where some of these companies might have been willing to advertise maybe on television. Maybe this kind of puts the brakes on that a little bit more, and they go back into more of the digital platforms where it's a little bit more tangible with the results and the measurement capabilities. And so I think we'll see how that all factors into their to decision making.
Yeah. I mean, from a large brand perspective,
Right.
I think we're still seeing a high demand for
Yeah.
sports. That has not
That hasn't changed.
dissipated, right? So Super Bowl already for next
Yeah.
February is a huge deal. We have the World Cup
World
coming up
Cup
in
a
the
few
US.
years out. Yeah.
And globally, that will be a big seller globally, right? It's going to be hosted here, so even bigger, but certainly for European markets as well, and everywhere around the world because of the fan base that football has. And then we have the Olympics hosted in the US as well in 2028. And so there's
2028.
this sort of cadence of sports and big events that happen over the next couple of years that are going to help, I think, buoy and support those rights holders as well.
Yeah, no, I agree. And depending on where we are, it's hard to think down that far down the road already. But depending on where we are, it's going to be interesting to see how advertisers respond if they take more of brand, recognition sort of, approach rather than selling items or specials. So I think, like we've already seen that a little bit with Ford with their new advertising campaign, just focusing on assembled in America, made in America. So it's gonna be interesting to see, just how advertisers respond if we're going to see more of that type of messaging.
I think it's so important, right? And large brands that invest in that brand, like, do have advantages as you go forward. And I will still buy, like the sugar that my mom bought when I'm baking, right? And even more than that, I think there were, as we had all of these upstarts a couple years ago, especially in the CPG sort of direct to consumer brands, some of them have done well. I think large brands in some cases felt like they had to chase those tactics in terms of being more digital. And yes, we all had to become a little bit more digital during the pandemic because that's where consumers were shopping. As activities and behavior returned to more, shall we say, normalcy,
Hmm.
I think the big brands did well out of that, especially because of those large distributor and retailer relationships. But continuing to invest in those brands for the long term, I think it's going to be important in a
Yeah.
downturn, just like it was during COVID.
No, I agree. And, sort of looking at a, platform like television, if you're a large brand and you want to educate the consumers about your made in America and credibility, television still has a lot of value to get that message out there for maybe some brands that people aren't fully aware they're still manufactured in the US or have a US, sort of a US base. But it's going to be interesting to see if brands sort of pivot back to that. So,
So
yeah.
I'll offer one counterpoint because it's a very U.S. focused conversation. I'll
Yeah.
offer one counterpoint, and then we'll move into financial services too. I was reading an article that there have been a few grocery chains in Europe that are labeling American goods so that their customers can avoid
Boy,
made in America goods,
right.
right? So it definitely works both ways. I want to make sure we're
Yes.
cognizant of impacts this is having, outside of the US as well, for sure.
Yeah.
Yeah, I mean, having lived abroad for years, it's hard to uh, square that, again, global village idea with kind of where we sit today.
Exactly.
All right, let's pivot a bit. I'm sure we'll come. We'll be talking about tariffs again, I'm sure. As we said, it'll be a main focus of a lot of the earnings conversations that are happening over the next few weeks. But we have Nidhi, and let's chat through what you've been seeing in the financial services category.
Yeah, I mean, it's been overall quite a resilient sector in 2024, particularly. Total revenues grew by 9.2%. Advertising expenses grew even faster at 10.6. I think as we head into the quarter one earnings season with banks reporting in the next few days, tariffs undoubtedly will be the key focus. as I'm sure it will be with many other sectors too. I think financial services is an interesting sector as a read for the economy, but also the kind of direct impact of tariffs on this sector is expected to be minimal due to its focus on services rather than goods. Although, it'll be interesting to see how and if that situation changes, especially if there are more talks of services coming into play, especially in terms of retaliation from other markets. But at present, I think the broader economic challenges, do pose indirect risks such as high inflation, currency fluctuations, weaker asset valuations, all really the talk of town at the moment. We may see a slight slowdown in business growth, especially if interest rates remain, as high or even increase further to control inflation. If that's one of the possible scenarios that exist right now. But all in all, lots of reaction to the tariffs in the recent week. One such example has been JP Morgan's CEO, Jamie Dimon. He's highlighted geopolitical risk as the largest risk for the company in his annual shareholder letter this week. And in his exact quoted words, he said, whether or not tariffs causes a recession remains in question, but it will slow down growth. He further said, this the quicker this is resolved, the better, because some of the negative effects increase cumulatively over time and would be hard to reverse. I think all in all, it's clear that the long-term impact of tariffs is still uncertain. Although a recession isn't guaranteed, tariffs may slow down economic growth. But really, the biggest question is by how much? In the latest update by the OECD in March, global GDP growth forecasts for 2025 were downgraded slightly from 3.3% to 3.1%. Now, if you look at that 3.1% figure, it was not too far off from the 3.2% growth figure in 2024. So it's a question of how far down, or will it stay steady at the current rates as we go across this year?
Yeah. Yeah, I mean, the recession risk calls, certainly in the US and I think somewhat global as well, are definitely increasing. There are still a lot of people, I think, saying it's not their base case, but the chances have gone up for recession. So all data points that we'll be feeding into our forecasts. Absolutely. Anyone looking forward to something specific next week? Shows? What are we listening to? What are we reading?
Well, outside of economic news, I think we're we've got we're heading up onto NBA playoffs, which is always exciting, and we're already a couple weeks into the baseball season, so those have been fun to watch.
I'm so excited because finally, I mean, we could probably spend a long time talking about the demise of regional sports networks in the US, but the upside is that now I can watch Giants baseball again without cable. It's on Peacock. So I've been watching baseball and it's been fantastic. Our series against the Mariners was a lot better than the Reds so far, but yeah, it's been really great to have baseball season back.
Yeah, no, and also I just started watching The Studio on Apple TV, so the Seth Rogen one.
Nice. Okay. Nidhi, any show recommendations?
I've had such a heavy week. I finished off Adolescence and with the Tariffs, so I'm going to take a bit of a breather with the Apprentice semi-final this Thursday. So
Some lighter fare. We did also watch I watched Wicked finally over the weekend. I know I was late to the party, but that was good also. So yeah. All right, well, we will be glued to our TVs and monitors while continuing to watch Bloomberg and CNBC and all the other BBC news, wherever you get your tariff news. And we'll be back to speak with everyone again soon. Thanks so much. This Week, Next Week is a podcast from Group M, WPP's media investment company. The views expressed are for informational and entertainment purposes only and should not be taken as financial advice. If you have comments or questions for the show, please email business.intelligence@groupm.com.